All right, well, hello everybody. Midweek update time. It's the 8th of October. Joe with you here. You guys know how this works and take responsibility for whatever we share with this class.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick Traders received this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
So our current market outlook really hasn't changed, at least for me. It's been interesting to see some things as of late with the government shutdown. The SPY and the Qs are actually pushing towards new highs today. A little bit of a pullback yesterday. I got to do the end of day post yesterday, and it was a pretty good one. I was expecting a little bit more. I'd like to actually see a little bit more downside corrective action or consolidation to create opportunities to get into some of these bullish trades. However, not a lot of stuff is participating. I'm seeing a whole bunch of news-driven momentum in some of the larger cap stocks. And it's the main contributor to any sector outperformance day to day. It is very specific to AI as of late. A couple of weeks ago, I saw a bunch of stuff very specific to healthcare, but it's rumor driven. And these aren't small moves, they're substantial moves. Really shows that there's a ton of money out there that's more than willing to be put to work. We'll take a look at the charts here in a second. But the optimism is definitely there. Whether it's acting like a top or not, we can have that conversation. However, if we don't get out of the way of this surge to the upside, it could be pretty painful if you're trying to bear it up. So what I do, well, I'm just going to leave it at a +1 since we are testing those highs on the SPY and the Qs. The diamonds, not so much. The Russells did set a high a week or so ago. And so I'm seeing a lot of the movement specific to larger companies based on news. And that's kind of all I got. Let's get into something that really isn't helpful. And yes, folks, I had to really manipulate the slide to fit some of the information that's just not there. So the FOMC minutes should be coming out as I'm talking. We'll see if that changes during this class. But I shouldn't say unfortunately, but I would imagine there's going to be a whole heck of a lot hung on this because we haven't seen a lot of economic numbers over the last few days because of the shutdown. In fact, we're still tentative here on the next round of unemployment claims, which would be 2 consecutive claims week to week. We do have the preliminary. This is the University of Michigan sentiment, so these will probably come out as well, but I don't think it's going to make too big a difference. I think the focus is going to be on basically what the Fed says here when it comes to continuing easing or kind of their outlook, and we'll see what the markets do with it. But overall, folks, it's been a super bullish move outside of anything, and it is very, very specific to rumors and announcements. So, with that being said, let's just take a look at what the markets are doing. Big move to the upside. Once again, it was pretty interesting to see the markets actually close a little bit lower. It wasn't by a lot, but these surges just seem to show me that, hey, look, whatever's coming across the boards. In fact, let's just get to it. Let's get to the heat map here. And you could see their specificity. That's a hard word for me to say. But take a look at Caterpillar, 4.4%. And then take a look at how large of it is in its overall sector. It's huge, so it has a big impact on it. Here's United Healthcare. This is a $300 billion company. It's up 2.4%. Where's it at? Here's AMD, up another 5.6%. So these larger companies, when they have moves, they become super substantial, and they're all driven by news. I'm highlighting these because if you guys click on them, you'll see there's headlines to anything. Here's CEG. This is one that I thought was interesting. So I took a look at materials and utilities and seeing why they were so strong today. Here's CEG up 4.23%. The rest of the stocks in there don't look very good. So very specific to news-driven things. And they're hard to play because they move so fast and so hard that it becomes, okay, well, how do I jump on or try to catch some? And the answer is we really don't have the chance. So as I've been kind of looking at that, I just said, okay, well, what can I do? And the idea is we just got to take a look at some of the charts that we've been looking at that have been kind of slow and steady. Now, the stuff that we've shared with this class, folks, over a little while have done decent. I mean, I've got some sideways trades that are great. I've got some bears and bulls from you guys that have worked out, but I'm not getting AMD numbers or Oracle numbers from a little while ago. All right, so that's kind of my outlook for what I've seen over the last week or so. Let's take a look at some trades coming across the board. Jazz, thank you. Here is our first trade here. All right, so let's get into this. Breakout above the 225. Absolutely. This is an area that you could see that it's hesitated at, a little bit of a pullback, broke at, retested around, gap down to, came back, it broke through, it retested it again here. Yeah, 225 is definitely a level. The only thing that you got to figure out is, okay, how far do I want this to go? Short term, longer term. A couple things that I will mention on it. It hasn't finished yet. The volume is a little bit decreased over this move yesterday, and this gap is anemic so far. That can completely change on the day's close. But if you're looking for a specific number above that 225, it makes total sense. You do have a crossover. This could kind of push up and then roll. But if you're doing something shorter term, just catching the momentum of the upside, it makes sense. For those of you who want to keep it a little bit longer, meaning, okay, let's see if it does break above that area, hit maybe a 228, which is also a resistance area, and then roll back down because of these crossing moving averages, yeah, you could wait for it as a bear as well. So a big part of this, and thanks for bringing this up, Jazz, is it really depends on your time frame and your outlook. Are you a 1 week guy, 3 day guy, or are you, hey, maybe I can see the overall motion of the ocean? If everything decides to get weak and I get a little bit of a rollover pattern like I had here, then I could do something bearish. I found shorter term reactionary seems to carry a little bit more momentum. Being patient and letting things confirm sometimes does not work. So it can become frustrating. Understand, you got to follow your rules. I might not be able to make as many trades as I would like to, but that's because I'm not getting any sort of follow through with the trade setups. So you might run into that. Here's CEG. This is Constellations. This was a big move, one of the larger moves that we saw today, up 14%. You can see this, or excuse me, $14, 4%. Big move to the upside there. Utilities company. Now, I like the pattern. Did we miss it? I don't know. It's a large gap on a large stock. 4% on $370 or around 300 and what it was, 360 is a pretty big move. You can take a look at some of these candles that it's had as of late. That's a gap down with a hammer. Here's a shooting star that actually closed on the low, and here we have kind of what's referred to as a spinning top so far. Gap up, down, down, up. So if you're going to play something maybe, hey, as a breakout to the upside, you're going to have to be longer term, I believe. Maybe not longer term because of the volatility, but you're going to have to be wider ranged. I'll tell you what, I like the chart. Let's make sure that we write it down so we can at least reference it maybe later. So I'm going to put it down. Thanks. All right, let's take a look at a couple more. CRSP, a healthcare company, breakout. We saw this last surge here. I won't be specific to this stock, but this is the surge that we got based on some of those rumors. But what I like about it is it didn't really retrace as much as I've seen some of those others come off the top. So nice little breakout here. I do like it. Same idea. It's extended. Look how far away we have. A beautiful crossover here, but it's extending itself price-wise from its averages. So most of the time we talk about time correction. We also talk about price correction. Moving averages will eventually come back. So a surge like this would be great. However, if you're going to go a little bit longer term, you have to expect probability-wise that it's going to consolidate or even retrace. So just be mindful of that. Let's go ahead and add it to the list. Taking a look at a couple more. Here's MDT. Another healthcare, kind of doing the exact same thing. High base. Here's that surge that we had. A little bit of a reversal. It seems like it's coming back up. I mean, intraday. You're in the same situation that you were with CRSP. Here's GFI. Gold continues to push higher. I like the chart. I think it's great. Let me write it down here. But once again, this is a nice ascending triangle, a little bit of a pop-up, got a gap, so expect some sort of a consolidation, maybe even corrective action in the shorter term. SOUN. Soundhound, Good push, nice breakout, confirmation, ascending triangle pattern. Let me shrink this down a little bit for you guys who are longer term. You got a target here of resistance. Oh yeah, it already broke above this area. But once again, same idea. The extension of the moving averages, the expectations of your target. You can snap some Fibonacci's on that. Take a look at the ATR. I mean, 8%. Well, that's a big move, but it can be great. And let's see, Bill, you did share a trade with us. 1920 bull call for 2 weeks. So cut this in half. Sorry, folks, my first line might be a little bit lower. And he's looking for 2 weeks. So the expectations are it'd be really nice to see it exceed and then pull back. Even if it doesn't, let's say it pulls back and uses 18 as support and then continues higher. I mean, your probability of landing this is going to be super high, or higher, I should say, because you have the 2 weeks. If the volatility on this continues, if you get a direction like this, but to the opposite side, something like that, it can be, oh, well, geez, now I'm 18, 17 area. That's the volatility I'm talking about. A lot of these stocks and the movements and the money that's coming in and out of them has created wider ranges. So not a bad trade. I like the breakout. Let's add it just for fun so we can keep an eye on it. Let's take a look at LCID. And the question is, how do you see this performing in next 3 weeks? Well, I'll tell you what. If I knew that answer, we'd be millionaires. We'd be really, really, really rich. However, 3 weeks, that's a hard ask, my friend. But let's take a look to analyze it. Take a look at this level here at, what is that, 22? For some reason, it just likes this. A little bit consolidating slightly above it. Came back, retraced slightly, comes back. Flew through it this time. So we got that area. The second thing I'd take a look is its moving averages. What I see on the averages, this thing is still below its 200-day moving average. We've got a crisscross going on with that 2050. So this thing has been trying to kind of figure itself out. The move from up here to down really would throw me off because now I don't have this really cool consolidation that I had April, May, June, July. So a pivot point here it would show some strength, but it'd be hard to believe in because of this surge. Really had no retest. So this pivot point would be great. If you wanted to follow along, and once again, where's this going to be in 3 weeks? I don't know. However, if you're going to go that far out or think of something that could be longer term, wait for a breakout above something a little bit more substantial. Let's make sure that this pivot point can hold itself and then it surges up. I would look also for good news in it, things in its sector that are doing pretty good, stuff like that. However, if we see more hesitation or a drop, I'd probably just take this off your watch list. That's my 2 cents in a nutshell. So consumer cyclical auto manufacturers, folks. I've seen AutoZone. We've seen all of these stocks that I've actually loved. O'Reilly. And if you take a look at them now, they're just not hanging in there. Let's just jump to O'Reilly for fun. I love these stocks. Ascending triangle, breakout, retest, push. Great. And then as of late, they're just bleeding off. That's breaking. That's a pretty major support level. The volume's not too high. I mean, it's coming into its earnings. Here's AutoZone doing pretty much the same thing, right? Breakout looks good. I thought it could turn here. Gaps down, shoots up, and then sets a lower high, and it starts to roll over. These things have been super, super strong, and they're just out of favor. They're not participating anymore. So long story short, on the LCID, see it, just wait. Make sure that it proves itself before you actually maybe get in that trade. Jumping over to VSAT, another technology company, high basing, right through here. Nice. So it's channeling. I like this one. It's kind of hanging in there. It looks like it's waiting for its AI announcement, right? Everyone's going to have an AI announcement. But whatever. I like today's candlestick. A slight gap up higher and a good push. Wait for it. I would wait for it to confirm above that, maybe 34 even. Make sure that it surges to the upside there. But it does look pretty good. Make sure you target it right. Be mindful of your expiration cycles, your time frame on that one. We got a bear here. This is LYV. Communication services. Let's see. Entertainment. Yeah. Some of the bears that I had yesterday, folks. Comcast was one of them. They're in the communication services sector. Zillow. However, they're just falling out of favor. So the weakness that we're seeing there is pretty specific. This is a pretty decent breakdown. It looks like it can continue that way. This was a substantial move, I think, for it. That's a really anemic bounce. Unfortunately, it did gap, but most of the time that's what happens. Think about all the stops that are triggered when it comes to look. So you do get a lot of that, which part of the volume could have been that. Might have been an announcement, or maybe it's coming up to its earnings. Another gap down today. It makes it tough. So just make sure that you're aware there's a 148 floor here, at least for now, and then there's a 154 resistance. I really get really upset when I've got a bear on my watch list and that happens. Most of the time it jumps over the position that I wanted to buy because I didn't get the credit that I wanted, or I didn't want to pay too much for the debit. And then the volatility is going to be high, at least in the shorter term, and it's in this no man's land. If I was going to get in at 154 with a target of 148, well, it's right in the middle of both. It's like, or actually it's towards the bottom side. It's already chewed up the majority of my profits or potential profits. Be patient with this. See if it can consolidate. I would set it aside on your watch list and then look for something else and see what it does. I mean, if it could pull back and set another high and then go down, that'd be wonderful. But if it continues to fall and hits this level and pulls back and consolidate and move lower, so it's kind of taken away, I believe, the trade that you might have been looking at, or at least the one that I would have seen just looking at this as a chart. So set it aside for now and revisit it later. Let's take a look at ANET. ANET, another technology company, very similar to VSAT that we just looked at, isn't it? Almost the exact same pattern, right? A little bit of a gap up, moves higher, breaking above resistance. Just make sure it confirms. Double check earnings because that's on its way out or coming soon. How's that? Let's take a look at some sideways. This is XLE. And this has changed since I pulled it up. I've liked it's XLF. I'm like, that's changed a lot because it's the wrong ticker. Okay, here's financials. I still like this. This has been on our sideways for a while, folks, and it has been pretty decent, and it continues to do this same wait and hold. I'm not sure what happens after Powell speaks or what goes on tomorrow, but this is kind of a government shutdown, AI-driven, news-driven market. So when it comes to the financial sector, it continues to stay sideways. So I like that. Now on the bear side, since we didn't really, we looked at one or two, and thanks for sharing, folks. But here's another one. Here's Airbnb. I had this, I think, off of yesterday or 2 days ago. Hasn't broke yet. It's still on my list. I like to see this kind of sliding a little bit lower. I think this is going to be more of a -1 trade, probably a targeted butterfly around the 118 area, 117 and a half. So it's been super difficult to follow along with, folks, because there are very specific stocks that have driven by news specifically that kind of carry a lot more weight. Let's go ahead and just share the trades for today. But you can see we just didn't have much on the bear watch. Go through some of those sectors that are underperforming, and outside of those larger companies that are kind of holding things up, you're going to see a lot of opportunity. Go through some of those stocks that were doing pretty well that were outside of technology, and you'll find they're getting weaker, and there's opportunity there. So we've got a very specific market. We got a very aggressive bull surge going into the markets, but it's very targeted and specific to news, earnings, and companies. I don't think that's going to change. If you are playing anything outside of that, I believe that there's opportunity out there if you're just patient with it, especially a little bit more to the bear side. All right, guys. Thank you so much for joining me, and we'll talk to you next time. Bye, everybody.